What if a song could be worth more than oil? What if a beat could outperform the stock market? Across the financial world, something unexpected is happening. The culture that started in the streets is now being traded in boardrooms. Hip-hop is no longer just music. It is becoming an asset class. Firms are buying catalogs. Investors are securitizing royalties. And global markets are turning rhythm into revenue. This is the billion-dollar flow. Hip-hop began as expression, raw, local, and filtered. From the streets of the Bronx, it grew into a global cultural force. Artists like Jay-Z, Kanye West, and Dr. Dre didn't just make music. They built brands, and those brands generated something powerful: intellectual property. Songs, lyrics, beats, assets that could be owned, licensed, and monetized over time. What started as culture became capital. For decades, music generated income through sales and performances. But the digital era changed everything. Streaming platforms turned songs into long-term revenue streams. Every play generates income, every license adds value. Suddenly, a hit song wasn't just a moment, it was a cash flow machine. This caught the attention of major financial players. They saw predictable revenue, low correlation with traditional markets, and long-term growth potential. Music became investable. Music catalogs are now being treated like financial instruments. Just like real estate or bonds, firms buy the rights to songs. Then they package those rights into structured assets. Investors can earn returns based on future royalties. This process is called securitization, and it transforms culture into something tradable. Songs become portfolios, artists become revenue streams, and hip-hop becomes a financial product. Not all music genres are equal in this system. Hip-hop dominates. Why? Because of its global reach. Its influence spans fashion, social media, advertising, film. A hip-hop track doesn't just generate streams. It creates trends, and trends generate demand, which increases licensing opportunities, which increases revenue. This is why catalogs are now premium assets. In a volatile economic environment, investors search for stability. Traditional assets fluctuate with interest rates and inflation, but music royalties, they behave differently. People listen to music in good times and bad, which makes revenue relatively stable. This creates something rare, an uncorrelated asset. That's why firms are aggressively acquiring catalogs. They are buying predictable cash flow, but there is a deeper question. What happens when culture becomes controlled by capital? When firms own music catalogs, they influence what gets promoted, licensed, and prioritized. This could shift creative direction from artistic expression to financial optimization. The risk is subtle but significant. The more culture becomes financialized, the more it may be shaped by returns instead of creativity. This trend is only beginning. We may soon see more artists selling rights early, and more integration between entertainment and finance. Entire portfolios built on cultural influence. Hip-hop is just the starting point. Everything with cultural impact becomes investable. Hip-hop began as a voice, a movement, a form of resistance. Today, it is something else entirely, a financial instrument, a global asset. A billion-dollar flow moving through markets most people never see. The question is no longer, is hip-hop powerful? The question is, who controls that power? Subscribe to Global Briefing 360 for deep insights into hidden economies, global finance, and the forces shaping the modern world. Because sometimes, the biggest markets are built on the things we listen to every day.